Hello everybody, welcome to E-Learning Academia. This is Yashoda Srinivas, your tutor. A lot to learn, a lot to know. This is a segment of crisp notes within 10. Today we are studying this concept which is relating to types of commission. In consignment. Okay, see this. He's just searching here and there what is going to be inside the class. Okay, so this one will be learning types of commission inside the class today. This is my channel. This is the subject which we are studying now, advanced financial accounting, that is accounting for consignment. Please, if you have not yet subscribed to the channel, please subscribe the channel, press the bell icon so that you'll be getting a regular notification of the class whenever the video is uploaded. Please like the video as well as share it to all those who are in need of this video. Yesterday we spoke regarding who is the consignor, who is the consignee, what is the cycle which is followed in the consignment process, and what is the work of a consignor, what is the work of a consignee, why does the consignee come into the process of consignment. His main intention is to make profits, that is commission. His main intention is to earn the commission. So in this concept we are going to learn what do you mean by commission. Commission of a consignee is calculated on the gross sales made by the consignee. Okay, if at all consignee is the person who has been appointed by the consignor in order to consign the goods, whatever the sales he make, so based upon that he will be paid the commission. So it is reward to the consignee by the consignor for selling the goods of the farmer. If at all, farmer is nothing but the person who is the consignor. Understood? Whenever you are talking about commission earning, it is a reward for the consignee. Okay, it is nothing but the reward for the consignee. It is given by the consignor for whatever the sales he is being made. It is a consideration which is paid. Understood? So this is what you have to know. In the next thing you are studying, see here, commission is the remuneration paid to the consignee by the consignor. Okay, for the services rendered by the consignee. It is a service rendered by the consignee in selling the concerned goods. Whatever the consignment he has sold, regarding that he is going to make the sales. Based upon that he is going to receive the commission. So regarding generally, the commission is calculated on the total sales affected by the consignee. Obviously whatever the sales are there, based upon that only he will be paid the commission. So that is what is being said here. Commission is a remuneration paid to the consignee by the consignor for the sales which is being done, and it is like a reward for him. Okay, so that is what has been said. So whenever you are paying commission, it is of three types. First one is, commission are of three types. First one is ordinary commission. Second one is del credere commission. Next one is overriding commission. They are of three types. First one is ordinary, second one is del credere, and overriding commission. These three commissions are paid on the basis of different occasions or different situations. So first we will learn about when is this ordinary commission paid. Ordinary commission is paid to the consignee when he is not responsible for any debts, bad debts. Ordinary commission is paid. Okay na? So see here, whenever there is a transaction like credit transaction is there, and after credit transaction, whoever the debtors are there, no, debtors are there, those debtors have not paid you amount, they have not repaid the amount whatever the purchase they have made, that will be called as bad debts. Okay, so if the consignee is going to bear all those commission paid, the commission is paid to the consignee when he is not responsible to the bad debts. Okay, whatever he makes the sale, even though bad debts arises, okay, he is not made responsible for that. Okay, bad debts whatever may be there, whatever the bad debts are there, he is not made responsible for those bad debts. Okay, so that segment is nothing but what? Ordinary commission segment. Okay na? So it is calculated as a fixed percentage on total sales made by the consignee. Be very careful. Whenever you are talking about ordinary commission, it is nothing but an ordinary procedure in which whatever the sales he makes, it is not talking about the credit sales, it is talking about moreover it is not about talking about cash sales, it is talking about the credit sales. Okay, whenever there is a credit sale, if one of your debtor is not paid you or returned the amount, it will become a bad debt. If that bad debt is not owed to consignee, then that type of ordinary commission which is paid by the consignor will be ordinary in nature. Okay, so ordinary commission can be calculated as follows. What is the procedure for it? Commission per unit and unit sold. Usually we do this. Total number of units which is sold by the consignee into commission per unit. For example, he has sold 500 units into 5 rupees per unit. Okay, so then it would be 2500. So this is what is the ordinary commission. This is how you will calculate. The second procedure is commission percent into total sales. Sometimes he'll give 1 lakh is the total sales into 5%. Okay, he will give in the form of percentage. So that time total sales into commission percentage would be the formula. Okay. Next important thing is del credere commission. Del credere commission, very important topic from your exam point of view. So be very careful. The commission paid to the consignee, it is also a commission paid to the consignee. Then who is responsible for bad debts incurred out of the credit sales affected by him is called del credere commission. What is being said is, previously they said bad debts is not at all, the consignee is not at all responsible for the bad debts. But here the consignee is made responsible to the bad debts. Okay, whatever the credit transaction he does, whatever the credit transaction is he does, whatever the bad debts is arising from those credit transactions, this is being made responsible to the consignee, okay, which is affected by him. And this is called del credere commission. Okay, del credere commission means whenever he is made responsible for all those bad debts out of his own credit sale transactions, then it is nothing but the del credere commission which is paid. It is an additional commission paid to the consignee to bear the loss of bad debts incurred by him. Why he is giving that? If at all he is making any losses due to bad debts, if some debtor has not repaid the sale value of what he purchased, during that time, in order to recover those losses, he is being paid this commission. Okay, when the Delcreditor commission is paid to the consignee, consignor need not bear the loss of bad debts. Previously, what we said, whenever he is not made responsible for the bad debts, complete responsibility will be taken over by the consignor. But in this process, whenever he is paying you some commission to take care of the loss of bad debts, this person is not at all taking any headache. This person is not at all bearing any losses. This person is completely irresponsible for this. Okay na? So this person will take up all the loss of bad debts and responsibility for all the loss of bad debts. If he is paying you, then you will be made responsible. Consignee will be made responsible. If he is not paying, consignor will be responsible. If he is paying the amount, for that amount he has to work hard. So that is why the loss of bad debts will be owed to this consignee. Okay, arising due to credit sales made by the consignee. So this is what is the procedure. Okay, next one. If the consignor does not pay the commission, if he is not paying any commission, okay, entire responsibility of the credit sales and collection from the debtors in case of credit transaction belongs to the consignor. In case if he is not paying the Delcreditor commission, then the whole responsibility of the bad debts will fall on consignor only. Okay, bad debts is also borne by the consignor. Delcreditor commission is calculated as follows. This is the formula: Delcreditor commission percentage into total sales. Delcreditor commission percentage into total sales, like that how we calculated the ordinary commission, in the same way, but we have to calculate the Delcreditor commission percentage on the total sales. This is the formula. Okay, the last percentage is overriding commission percentage. So what do you mean by this overriding commission? Something is being overridden. So what do you mean by this? It is an extra commission allowed by the consignor. It is also a type of commission in which the consignor, he is paying to the consignee to promote the sales at higher price than specified, or to encourage the consignee to put hard work. So whenever the total cost price is 100 and he selling price is 100, and he is telling him to sell it more than 100. Okay, selling price is only 100, he want to earn, or he want to go for another 20 rupees profit, out of which he is going to earn so much of money. So that is why this extra 20 rupees will be paid, will be given to him. He will be paid the commission if he pays in at 120 rupees. Okay, so the main intention of this is in order to motivate the consignor. In order to motivate this consignee, he is paying the commission. Okay, so even though the sale price is 100, he will tell to make the sale at 120 rupees over and above the sale price. Okay, so this type of promoting the sales at higher price, and if at all they are introducing a new product, okay, consignor is bringing a new product, and that consignor is bringing a new product, the effort should be put by this consignee. In order to motivate this consignee, he is going to pay the additional extra commission. Okay, depending upon the agreement between consignor and the consignee, it is calculated on total sales and on the difference between actual sales and sales at invoice price. Actual sales and sales at invoice price, already there is an inflation in the price. After that also there is an hike in the price with which they are making the sale. Okay, so ORC, that is overriding commission, is equal to commission percent into surplus price realized. Surplus commission percent, you already know what do you mean by that. Surplus price realized means, how do you get that? Surplus price realized is equal to Gross sales means total sales minus cost price of goods sold. Whatever the cost is involved to sell the goods, it is all involved here. We have to deduct that. Then only we are going to get surplus price realized. Okay. So next one, gross sales minus invoice price of goods sold. Invoice price means whatever the cost is there, upon that there is some addition. So if there is an addition of loading, then it is called invoice price. Cost price plus invoice price. Cost price plus loading is equal to invoice price. Okay, so that is what being said. In the second case, he is telling that it is being sold at invoice price, which is higher than the cost price. Last, there are three ways. Either ways you can choose. Okay, for calculating this surplus price realized. Specified selling price of the goods sold. Specified selling price of the goods sold is also like the cost price only. So these three cases you can find out the commission which is paid to the which is paid in which he is paid the overriding commission. Okay, that's all for today. Thank you so much. I hope you liked the video. The session was informative and educative. Please do subscribe to the channel and press the bell icon to get regular notification. Like the video and share it. Please share the video to whoever is in need during this pandemic. So this is the end of the session. I think so. We'll be meeting soon with the new video, that too with the practical sums. Again, question paper problems 6 and 14 marks will be solved very soon. Thank you for the day. See you soon. Have a nice day. God bless you all.